TV18.
Hello and welcome to CNBC TV18 Classroom. I am Anuj Singhal. Last week I did a show on traders losing a lot of money chasing quick returns via futures and options. I got a feedback to extend this to discuss some basic rules. Today I have a guest who is hugely successful stock market investor, but he's passionate about investor education. In fact, if you go to his YouTube page, you will see him singing, and he's a talented singer as well. Very popular Bollywood songs adapted to stock markets. You would have guessed it right. We have Vijay Kedia joining us. Vijay bhai, thanks a lot for joining us and taking time out. Something that both of us are passionate about retail and how they should not burn their fingers in this market. Your basic thoughts?
So basic thought is this, what I have tweeted a long time back, that investing is like milking a cow and trading future and option. Whenever we are talking about trading, that means future and option.
Yes,
so
yes.
trading is like milking a bull. So it is so tough, so tedious, so difficult. And success rate, as we all know, that success rate in F&O, future and option is 1%, hardly 1%, even below 1%. So it's a very difficult task. People don't understand. They come with a dream, and they are treating this trading, whatever platform we are getting, like a gambling.
Yeah.
So I think gambling is more easier than making money in future and option.
Okay. So what Vijay and I have done, in fact, I spoke to Vijay and we prepared, it's mainly Vijay's thoughts on what are the basic rules which you should follow. So these are 10 rules that you can see. And we'll discuss all of them: education, senses, courage, retention, partners, stop loss, quantity, fundamentals, luck, and logic. Let's take it one by one. Let's start with education. So what's the basic tenet of education while you are doing stock market trading?
You see, there is a quote of mine which is like this, that no academic degree can guarantee you success in a stock market. So I was talking about investment. Now trading is very different than investment.
Yes.
So what I mean to say here, that suppose if you are a CA and MBA or Harvard educated, or you are an IRS or IAS, so you have this notion with you that you are very educated and you may be successful into investing, but that does not guarantee you that you will be successful in trading. Trading is altogether a different animal. So and I have seen many educated people, majority of educated people lose more money than the people who think and who are uneducated in this market. Because educated people have this notion that I understand balance sheet.
Yes.
So that is their problem. And trading is a different education altogether. It has nothing to do with what you have learned in your school or in your college or your university. It's a different study altogether.
Absolutely.
So that is why one should not be in this notion that, okay, I am a chartered accountant, so I can be successful in trading.
Yes. So one should still read some basic trading psychology or some stuff like that.
Yes, trading syllabus is different.
Yes.
So you have to study syllabus of trading.
Syllabus of trading.
Yes.
But
Then
don't
you can
assume
be
that just because you've done MBA finance or you've done a chartered accountancy, you'll be a successful trader.
Then you are more actually in a danger zone, on the contrary.
Okay. And trading is a full-time profession.
Of course, full-time profession, discipline and focus and everything is required. It's like a tap in Hindi, they call it.
Because see, the reason I say that is in the last episode, Nitin Kamath made a very good point that, and he has all the data, of course, that those who trade for a living actually have a poorer track record than those who have some basic source of income. So that's why, that the two actually don't gel, because, on one side you're saying that trading is a full-time profession, but if you make trading as your only source of income, then, you are struggling on 30th. If you've not made money, how would I put food on my table, and how would I pay my bills? That bit of and that impacts the trading as well, I guess, at some point.
I have also said somewhere in my quotes also that don't be dependent on the income of stock market. Forget about trading. You should not be dependent on the income of your investments also.
Okay.
That won't allow you to hold your shares for a long time. Because if you have to pay your bill on 30th, then whatever profit you are making or loss you are making, you have to quit. Right. So trading is, again, it is a faster. It is like it's like it having a speed of, it is supersonic speed. So of course, if you are dependent on the income of a stock market, then you are in trouble.
Okay. Now let's go to second one, which is senses. the 10 rules that were there, you are saying KYS is more important than KYC. Explain that to us.
So now what I mean by the know yourself is more important than filing your KYC with your broker. So before filing your KYC, you should understand yourself that have you cut out for this thing or not. It is applicable in investing. So as I am always repeatedly, I am saying that investing, if the rules in tradings are more, difficult than investment. So you have to understand yourself. Like what happens now, the moment you get into a trade, from the same moment you become a different animal, you become a different character.
Emotions take over.
Emotions take over. Then
Yes.
your fear, your anger, your worries, your depression, your disappointment. Then what is the purpose of your life? So what would you do with even if you succeed?
Is there a bit of a, like you saw in trading, is there a bit of a buyer's remorse as well? Why did I buy this? And as they say, it happens, right? The moment you buy it, it starts to fall, and the moment you sell, it starts to rally. So how do you handle those sort of emotions?
No, that is why you have to understand your emotions. Like every time you indulge into a trading in a trade, and suppose if your senses are, your emotions are not helping you, if they are not supporting you, I can write it down that you will be unsuccessful trader.
Okay.
Because all your emotions should be aligned for a successful trade. If you have fear in your mind, if you have worries in your mind, if you have confusion in your mind, that means that is a signal that this trade is going to be a failed trade.
Okay, fair point. So that's on senses, and in that one very important point that you make is run today to come back, and no ego in market.
Yeah.
Because ego can be fatal.
Yes.
Have you had any experience?
Of course.
In your early age?
Whole my life I had been experienced this thing only.
Yeah.
What happens now, people actually, they get into a trade, and although they know, suppose this is what, if it falls down 5 rupees or 10 rupees from my purchase price, I will quit. But they don't quit. Because the ego, because you can't receive that loss.
Yes.
I have learned this in my childhood. That in Hindi I would say that घाटा काटना अपने हाथ से दूसरा हाथ काटने के जैसा है.
हाँ.
So you can't trade that, you can't accept that defeat. Oh my God, I bought and stock price has fallen and now I have to sell.
Basically, don't make it personal. मतलब आज बचे हैं तो कल वापस लड़ेंगे.
Yeah, run today to come tomorrow to fight. There is no ego, So this is what market punish you if you apply your ego in trading.
Okay, courage. Now this is very interesting because what is there's a fine line between courage and stupidity, right? So how do you draw that line?
See, what I have learned and what I have understood, that courage is a double-edged sword in this market. Of course, courage is very important, but only courage cannot make money for you. Right? Strategy is more important than your courage. Suppose if your courage level from 1 to 10 is 5, for example, you are not very courageous, but your strategy is right and you are more disciplined and focused, then every time you can make money. Not necessary that you should have a courage like a warrior, not necessary in trading. Trading, you should always be fearful, or you should be balanced on the contrary. So courage, you should choose, you should conserve your courage to strike when for some precious moments.
So I mean, for example, you go into a trade thinking that, okay, this is what I believe, but just courage, just going into, okay, I'll just buy calls, or I'll just buy 50,000 calls, or I'll just buy 10,000 calls. Or you should have some kind of logic behind that courage as well, right? I mean, there has to be some strategy.
Of course. Otherwise, the same sword will cut you also, will kill you also. If you don't know how to, use a sword, it will kill you. So that is the logic that is the definition of courage.
So what you're saying is, you say that conserve your courage for a special moment.
Yeah.
When that moment comes,
then strike hard.
Strike hard.
Yeah.
Then strike hard.
When you are very convinced, intuitive, very convinced, and things are in your favor, then you strike hard. Then you use your courage. Courage is like your ace in the card.
Choose your moments, choose your battles.
Yeah.
And when you go hard at it.
Then go hard.
Okay, got it. Let's do one thing. Let's take a break. It's a very interesting conversation that we're having. We have discussed 4 rules. There are 6 more rules that we'll be discussing after this break. Welcome back. You're watching Classroom, and my guest today is Vijay Kedia, a very successful investor and someone who's passionate about educating retail traders and investors and giving life lessons, not just from his investments, but also on psychology and a lot of other issues. Let's now move to the next rule. Like we discussed, there are 10 rules that Vijay is discussing. We have covered 4 of them. Now let's come to retention. So by retention, what do you mean, Vijay?
Retention of money, what I mean. Because what happens, this is what stupidity I also used to do, I still do, that I start my trade with 500 shares and then again it is next, if I am successful, next trade is 1,000 shares, then it is 50,000, then it is 500,000. So that is more important. So what I understood, what I learned, that people should have a consistency in the quantity of their trade,
Okay.
Retention of money is more important. Every time you don't have to fight. Every time you don't have to indulge into trading. The moment you make money, you just try to retain some money, and a portion of money you should again put into the market.
Okay.
So that retention is very important.
So you start your trading account, say with 10 lakh. You made 4 lakh. Take that 4 lakh out.
Take that 4 lakhs out or take 2 lakhs out of the system.
So if you keep doing that process, at some point you reach a stage where you take your initial capital out.
Yes.
And then after that, at least you don't have it in your mind that, okay, you're hurting your personal money while trading.
Yeah, every time you should retain some money, whenever you are making money, don't just put all the money again in the basket.
Have basically don't get into the temptation, okay, that my trading account from 10 lakh has gone to 15 lakh. So now I'll start doing much higher quantity.
Again,
remove that 3 or 4 lakh and get back to what you were trading.
Inactivity is also an activity. Every time you don't have to be active in the market.
Okay.
Again, start from zero. The best policy is again start from zero.
Got it. Fundamentals. Now, fundamentals and investing go hand in hand. Fundamentals and trading do not go hand in hand. Right? They're like railway tracks.
Yeah.
So how do you marry the two then?
So that's what I'm saying. Investing, so far I have understood, investing has a lot to do with fundamentals, only fundamentals. But so far trading is concerned, there is no fundamentals. Fundamentals comes later on. When you buy a share, thinking that price is going to rise, and the moment its price falls, then you start applying fundamental into that stock in the losing trade. Balance sheet is good, numbers are good, company is doing good, this good, that good. That does not apply in fundamental. Fundamentals are like that operation successful and patient dies. You may be right in your fundamentals, but market will listen to those fundamentals maybe after 3 months or maybe after 6 months. And those fundamentals which maybe they are in your price also as on today. So don't apply fundamentals. Technical behavior of the market mood, trend of the market. Trend is the fundamental in trading. What I mean to say is, when you are in F&O trading, try to understand the mood of the market, trend of the total market, and that particular script where you are trading in.
Whether it's a trending market or not, sideways market or not, every market will have a different strategy.
Up market or down market.
Exactly.
So that is fundamental
of
trading.
Got it. Partners, this is something that I want to understand from you. What exactly is partners in trading?
You see, every time you indulge into a trade, you punch a trade every time. There are 4 or 5 partners. And I have told them partners in crimes. Of course, crimes is a rude word, but so don't take it as a rude. There are partners, like SEBI is your partner, stock exchange is your partner, broker is your partner, and service tax department, all these are your partners.
They will all make money for sure.
They will all make money for sure. Whether you lose money, you make money, every trade you punch, they are your partners.
Yes.
So don't forget that. That is why I said try to retain your money, because you have to feed your partners also.
Yes.
Just imagine NSE market cap in unofficial market is 1.50 lakh crore.
Yes.
It's okay. And you will find thousands of millionaire brokers, then thousands of millionaire traders.
Yes.
So this is nothing against them, but this is what you have partners.
Absolutely.
So be careful. That's what trade you are
Every time you do a trade, you are paying STT, you are paying stamp duty, you are paying for the brokerage, you are paying for
service tax,
stamp duty. For some money goes to SEBI as well. A lot of things go there. So the more you trade, you're making sure that at least those people are earning money. You earn money or not. You lose trade, you still pay those taxes, you still pay those charges. You earn money, you still pay those charges. So that's why that dice is loaded against you, and that is why it's important for you to remember that. Stop loss. Now the divide is that some people say stop loss is a must, and some say stop loss is a sure loss. So how do you define, say, a logical stop loss while you're trading?
What I have understood, Anuj, stop loss is like a medicine for diabetes and what you call hypertension and all. It's like a drug. Ultimately, it's going to kill you. It is not going to, you are not going to get your health back. It is going to just prolong your death. This is what actually drugs do. So, but stop loss is must in this market. Without a stop loss, you will be die today only. If you are applying stop loss, then maybe, as I said, that you will have a prolonged, you can
You'll
prolong
live
your
life,
day.
yes.
So maybe you will take 5 years to die, but without stop loss, you will die in one day. But there is a myth in this market about a stop loss. Let me tell you, stop loss has a different theory. There should be a different article about different definition of a stop loss. A stop loss in Tata Steel could be different than a stop loss in Tata Motors.
Absolutely.
Even two scripts quoting at the same price, say 1,000 rupees, even then they must be having different stop loss.
Absolutely, absolutely.
People don't understand. Stop loss is stop loss. 5 rupees niche dal diya.
People put monetary stop loss, and that
Yeah.
is, that is, I've taken a lot of pain to explain that monetary stop loss will get hit. Logical stop loss, even if it gets hit, then you at least in your mind okay, I tried a good trade, it didn't work out, but at least that will save you. So I think we'll do one special on stop loss as well. That's a big enough topic itself. Quantity, so you begin with small quantity, keep doing it, then raise it, and if you're unsuccessful, reduce the quantity. How do you manage quantity?
Exactly. Lot of people actually, quantity, I think one thing is stop loss, random stop loss. And second thing is quantity. People don't understand that how much quantity they should, trade with. That is again a myth. Because you ask people, either they will do 1,000 shares, sometime they will do with 5,000 shares, sometime they will with 10 lots and all. That is the biggest reason of their failure in this market. What I said, that one should have a consistent quantity, and this quantity should not exceed the capacity of your mind. Remember this thing, it's a mind game. Trading is a game of mind. Trading has got nothing to do with your fundamental, nothing to do with your stop loss. It is more of a mind game. The moment your quantity exceeds the capacity of your mind will start giving you wrong signals. Then again, your fear and anxiety and worries and all these things will start overpowering you, and you will lose that trade. You will sell at the lowest and you will buy at the highest. So that quantity, that is why knowing yourself is more important. I am suitable for one lot. I am suitable for 2 lots. And keep on playing same ball, same run, same ball, same run. Don't change that pattern unless you master the art of in that quantity.
In that, do you support the SEBI's move to increase margins, and now you have physical delivery margins on futures and options as well, for especially in expiry week. So you only put that much money where you can take the delivery. You think that's a good rule then in that case?
Of course, I think SEBI should ban trading. Whatever I am talking about, just only on behalf of newcomers and small shareholders, nothing about old people and veterans and all in the market. I have to learn from them. All these college people, students are coming to the market. I think SEBI should not allow. The way you are not allowed to drink till you have some permit officially. The same way, if you have not done some certain courses, I think SEBI should not allow. Encouraging beginners or newcomers in the market to trade is something, it's like giving a gun in the hand of innocent people. They don't know what I'm going to do with this. So, of course, this margin will certainly help.
And then, like in life, you can do everything right, but if the luck is not your side, you can still lose, right? So luck is important.
Luck is important, and again I will say that what happens now, people first of all, they get into trading because of their own ego. Later on, when they lose money, then they will say that mera takdiri kharab tha. So that comes later. So that is a problem. Luck is very important, of course. In everything, luck is important. But what I'm saying, you can't be dependent on the luck. Because trading is it's a speedy business. You can't be dependent on luck. Maybe once or twice your luck will protect you. But when luck protects you, luck is like no ball in the last over. It's something like no ball in the crisis. So, but every time luck favors you, it gives you a lesson. You have to learn that lesson. Next time your luck will not protect you. That lesson you learned will protect you. So luck is like giving you a a chance. It is like love.
Yeah,
so don't use that every time.
Don't extend your, just because you were lucky last time doesn't mean that you will be lucky every time.
No, you will be smashed.
Absolutely. And last of the 10 rules is logic. So logic in trading does not work, right?
There is no logic in trading. This is what I mean. People apply logic. After they get into a trade, then later on when they lose money, then all the logic comes. ऐसा हो गया, वैसा हो गया, इसने बेच दिया, FIs बेच दिया, DI बेच दिया. अरे छोड़, there is no logic here. यहाँ पर चलते चलते दिन में रात हो जाती है, रात को चलते चलते दिन हो जाती है. So don't try to find the logic. Logic is only in the trade. What the trade you are doing, the discipline which you are actually applying while trading, that is the only logic. So don't try to find the logic. So if you will get to find the logic, then you will lose.
Okay, you said trading against crowd is usually successful. Any
Yes.
example?
You see, I will tell you. In 2000, I used to do daily trading. Okay, after this KP things and all, and there was nothing, no business, nothing, no income and all. So I used to do daily trading. In daily trading, I learned this thing that whenever, and that what daily trading is applicable even in the trading, either it is monthly trading or yearly trading, the formula is same, like 2 and 2, 4, and 2 lakhs and 2 lakhs also 4 lakhs, and 2 crore, 2 crore also 4 crores also. So what happens, I have seen that whenever you will notice that suppose a stock is moving between 45 and 47 during the day. So, or whenever 45, 40, or 45, 50, 45, 50 the range. Suddenly you will find that suddenly a selling came and stock went up to 43 no time. Usually why it happens? Because a lot of people comes to sell at the same time. That is the time to buy, in fact.
Okay. Like circuit happened, and if you bought in circuit, for example, down circuit.
Yeah, so circuit is little different because of course, but 1 out of 10 times it will happen that stock market fall 45 to 50, 43. Second time it may go to 40, but 1 out of 10 times. So that time you have to put your stop loss.
Or 9 out of 10 times, if you are against that illogical sort of decline,
when people are selling, you should buy. When people are buying, you should sell. This is what trading is all about. Against the tide.
Okay, and there's another 11th, which is not a rule, but karma.
Of course, that's always I say when investing also, do good karma. It purifies your mind and soul. And it's a game of mind. It's a game of soul. You have to be a good human being. This is what I think. Otherwise, you won't be successful in the stock market.
Okay, fair enough. Now, okay, let's end. Can you sing 2 lines from that song that you had on trading, that you had written, that song that you had written on trading? "Ae Dil Hai Mushkil."
Oh, कभी DI, कभी FI, इन्फ्लेशन, कभी तेल, कभी डॉलर, कभी बारिश, इन सब का है ये खेल. शॉर्ट टर्म के हैं कई नाम यहाँ, जरा हट के, जरा बच के, ट्रेडिंग में मेरी जान. ऐसा समझो.
Vijay bhai, thank you so much. It was a pleasure to talk to you, and we'll have this show on, of course, social media as well, and of course on CNBC TV18. And I sincerely hope that people try to understand. Look, at the end of the day, you have to do your own battles. You have to win your own battles. But whatever help we can do, we'll try to do. Thanks a lot for watching this special episode of Classroom.